Shall we start?
Yeah.
Good morning, everyone. I, C. Kasim Ali, is excited to welcome you all to the APT Global's webinar on free zone taxation under the UAE corporate tax. Before we proceed, let me give you a brief about the APT Global. APT Global is a boutique chartered accountancy firm offering boutique solutions in the fields of transfer pricing, corporate tax, VAT, business restructuring, and all the alike services. Also, we are excited to share the news with you that we have opened our branch in the Kingdom of Saudi Arabia. I now request our senior partner, CA Uttam Patel, to kindly welcome you all. Uttam is a chartered accountant from ICAI and an All India rank holder. He is a certified professional in international taxation and IFRS from ICAI. I now hand over the session to Uttam. Sir, please.
Good morning, everybody. Great to see you all on a Saturday morning. And I see a very diverse field of people who are from corporates, who are professionals, even some of the logins are from India also. So this shows the desire to learn even on Saturdays. So I just briefly touch about APT Global. So we are a network of accounting firm across continents, and we have offices located in UAE, India, KSA, Canada, Italy, and soon we are opening in Singapore and South Africa. So we stand at the forefront of global digital landscape, accounting and digital accounting landscape, and our expertise allows us to provide localized insight backed by global perspective. What sets us apart is our commitment to excellence and independence. We adhere to highest standard of professionalism and integrity. And we have partners who are from diverse field and they are experts in their own knowledge domain. So one of such partner, I'll welcome Ayub Al-Shamali, who is a license holder in the UAE for audit, and he's an ex Deloitte, and he heads our assurance and audit practice at APT Global. Welcome, Ayub.
Thank you very much, Uttam. Good morning, everybody. My name is Ayub Shamali. I am a partner at APT Global, and I would like to welcome all of you on this session. I would be giving you a brief introduction, an overview about what is a free zone in UAE, and Avinash will give you more details about the new updates about corporate tax relating to free zone. So in general, the free zone is defined as a designated geographical area within the UAE that offers special economic privileges and incentive to businesses. The definition of free zone suggests that free zones are authorities that gives the license to companies to practice certain activities under certain rules and regulations. In UAE, there are, as most of you know, there are more than 40 free zones. Some of the most important free zones are Jabal Ali free zone, which is called Jafza, the Dubai Airport free zone, Dafza, ADGM, DIFC, Rakiz, Shams free zone, and many other more free zones. Now, a lot of businesses or startups come to us to give them consultation. And one of the first questions that they ask us, should I start my business in a free zone or a mainland? That is very common question that we receive from all new startups, whether they are new investors or are investors coming from other countries. Also, we have a lot of clients who are coming to us who requires some tax or audit services from free zone. And when I ask them, what's the reason you started your license in free zone? Unfortunately, many of them do not know why they have started their business in the free zone. Now, before I hand over to Avinash, I would like to give you brief also about some advantages and some disadvantages of free zone. One of the common advantages is 100% ownership. Now, most of you, maybe if you are here since 2015, you know, prior to 2015, many of the or any business who wants to start a business in UAE, they should have a local sponsor or should have a local partner in the company. At that time, free zones were offering 100% ownership for any foreign nationality. Now, the requirement for foreign or local sponsors no more required in UAE, even in mainland, except for certain activities such as law firm or audit firm. Other advantage of free zone is tax incentives. Avinash will cover most of the corporate tax related aspects of free zones. I would just highlight about the VAT, which might not be covered by Avinash. As per VAT value added tax law in UAE, designated area, designated or goods or services exchange and supply in designated areas are exempt from VAT. Other advantage from a free zone is the custom duty exemptions. So if you have, for example, a warehouse in, let's say, Javza, or you have a factory in Davza or Javza, you can produce or you can bring product to your warehouse and you can export it to other GCC or in Africa or to Europe or to other country without paying custom duty. That is one of the major incentives that some free zones gives to their companies or to the companies they licensed under them. Now, there are some other disadvantages of the free zones that people must be aware of. Restrictions. Now, the movement of some free zones, which are called designated free zones, such as Jabal Ali, there are some restrictions in the market. Restrictions means that the mobility of the goods are not like should be under some certain conditions and should be approved and should be going through some certain tests and inspections. Other thing that there are some limitation scope of activities. The free zones are very similar to the mainland in terms of activities, except that there are some different activities which are not allowed in free zones. And some activities are restricted, especially if you go to Javza, there are some certain activities that are available in Javza. Like, for example, you could, for opening a service provider like IT company or audit firm or accounting or tax consultancy firm, that doesn't make sense to open it in Javza, where most of the companies there are multinational and they are dealing with commodities, with products, and they are manufacturer. Another important disadvantage for businesses is that the regulations, the amount of regulations there in some free zones, that there are a lot of regulations that the company has to comply with, such as the DIFC, where they have a lot of disclosures, a lot of requirements, a lot of AML requirements that need to be adherent with by the business, and that also increases the cost of the admin cost of the company. The cost consideration is another disadvantage, which is in some cases is considerable. And for example, the IFC, the cost of license, and also ADGM, more like 2 or 3 times more than similar trade license in mainland, given that they are given some more benefit to the investor. I will now hand over the mic to Avinash to give you more insights about the corporate tax aspects of free zones. Yes, Avinash, you can start.
Thank you. Thank you very much, Ayub. And it's a fantastic opening by Mr. Ayub over this view about why we require free zone. So I think let us start with dealing more detailed version of about the free zone and the free zone taxation. Before I start this session of another 50 minutes, so first of all, there is a myth among all the people that free zone means free, and free means everything is free, meaning thereby there is no custom, there is no VAT, there is no excise, there is no corporate tax, everything is free. But friends, nothing is free. So free zone does not means everything is free. So in the free zone, the concept what Ayub have just mentioned in the beginning, that these free zones are created to give 100% ownership for the foreigners or expats. So if you remember 10 years back, 15 years back, when you want to do any activity here in UAE, so for each and every activity, we require a local partner. So the country have grown in such a way that they want their own people, their own citizen to grow along with the foreigners. And there is no harm in it. So every country have a right to develop, to grow their own citizen, so as to the UAE as well. So initially the UAE have come up and start the regulations that, okay, if you want to do anything in the mainland, then for every business, whatsoever nature it is, you require a local partner so that their own citizen will also be benefited about the knowledge, business, trade, etc., etc. And then slowly there are few companies who may not be or who are reluctant or who may not be willing to give partnerships to the local citizens of this country. So the concept of free zone was emerged, whereby the government said, okay, for certain activities, we will allow you to do business in the country or through the country, but it is restricted to the free zone with certain rules and regulations that they have created for that particular free zone. So we have free zones for various purposes as well, and that's how it is done. So for example, DIFC or ADGM. So these two free zones are created mainly for financial centers. So any bank, any insurance company, any PE fund, etc., is being want to create and set up through UAE. So they have given a designated zone that, okay, any financial activity will be done by these free zones only, and the right is with them as well. Similarly, for doing, let's say, commodity trading on a stock exchange, etc., etc., so they have given it to DMCC. So oil, that mainly it is being given to Hamriya free zone, etc. So may I request everybody to. Okay, so that's how this particular free zones are being designed. Then in 2018, when the VAT came into picture in the country, so many people believe that free zone companies are not subject to VAT, but that was not the case. So under the free zone, they have applied VAT, provided certain transactions are exempt, because those are exempt otherwise also. So for example, whenever we are exporting the goods from the country, so whether it is being exported by a free zone company or it is being exported by a mainland company, in both the cases there is no VAT. So the same is applicable that time on this free zones as well, that these particular transactions are not VATable. However, if a free zone company is providing any services either within free zone or to an mainland company, those are subject to VAT as well. Now the next milestone which have come into this country is corporate tax. So this corporate tax, again, when this corporate tax law came, or maybe way back when the public consultation document came, so at that time they have said that they will give relaxation to free zones, and there will be no tax on the free zone, or they will give some benefits. So it was generally understood at that time also that the government will give 100% relaxation to the free zones. But when the law came, so the law says, the decree law says that, okay, free zone companies are not subject to corporate tax, but they have to comply with certain terms and conditions. So that is how this law have been worded in the decree law. Then we know that yes, all the free zones are not subject to tax. However, those companies who satisfy certain criteria, so we'll discuss with those criteria in detail, then they are not subject to corporate tax. Otherwise, all other companies are subject to corporate tax. Then they come up with a cabinet decision on various things to clarify. And the most important part is they repeal their cabinet decision and come up with new cabinet decisions as well. So this is such an important topic, such an important subject that most of us are concerned and most of us are want to know about this particular subject. That's why we all are here on this Saturday morning and we will be discussing about this taxation. So the picture which stands as on date is that many companies in the free zones, if they qualify and satisfy certain conditions, they are not subject to corporate tax. However, the other companies who do not qualify the conditions, they are subject to corporate tax at the rate of 9%. Now, before I start my presentation, what is important to know is that if a free zone company is subject to corporate tax, and how they should pay the tax. So there are two important parts, which I think before we begin, we should understand it. So every free zone company is given a chance that either you will be treated as a free zone company or you will be treated as a normal company. So for example, Mr. Ayub and we both owns a free zone company. And from that free zone company, we both are giving consultancy. So let's assume we have a APT Global Consulting LLC, FZ LLC or LLC, whatever the name called, is a company where I and Mr. Ayub are 50% shareholder, and we both are the manager of the company. Now, the first thing which comes to us, the FTA says whether you want to go for the exemption or you want to be treated as a normal company. The moment we say, no, we don't want any exemption. We want to be treated as a normal company. So in that case, my liability to pay tax arise and I am being treated as a mainland company, or I will be treated at par with a mainland company, and all the liabilities and all the benefits given to a mainland company will also be given to me. So what are those benefits? So for first 375,000 dirham to that income, if my income is up to that limit, I am not required to pay any tax. So there will be a 0% tax up to 375,000 dirham per annum. Then over and above 375,000 dirham, whatever is the amount of income that I generate or that the company will generate during the year, the company is liable to pay a 9% corporate tax on that way. If company opts to go and to be treated at par with the mainland company. Then we say, Ayub and me, we said like, why to pay tax? We are fulfilling all the conditions. So let us go ahead and pay or claim the exemption. So in that case, government says, okay, no problem. You come, claim the exemption, satisfy the conditions, and show us that yes, you are satisfying those conditions. If this is the case, then it's okay. So what we will do is we will not levy you any tax on it. But during the process of audit or during any point of time during the year for which you are liable to pay tax, if you dissatisfy any condition or if you are not following any condition, then in those cases, or the company have any income which is not exempt, then in that case, the benefit of 375,000 dirham will not be available. Meaning thereby, even a 1 dirham income or a 10 dirham income, what the company have over and above the exempt income, then in that case, that is subject to 9% corporate tax. So there will not be any exemption of 375,000 or a 0% corporate tax limit of 375,000 will be applicable to that free zone company. Plus, one more disadvantage, that if you do not satisfy any of the condition, then you may be barred. You may not, or the company may not be able to claim that exemption in the current year, because the company is failed to satisfy all the conditions throughout the year, and it is also debarred for next 4 years. That okay, for next years also you will not be eligible to claim the benefit of the free zone. So that's why, friends, it is very important that when we are discussing about the conditions, when we are discussing about the provisions of exemption, those has to be satisfied, those has to be complied with throughout the year. And if somebody fails even for 1 minute, then in those cases your exemption will be withdrawn, not only for the current year but for the future 4 years as well. So that's why it is important for all of us to know and understand these kinds of provision that we have about the free zone. So with this, I'm just starting my presentation. A small disclaimer: so all the views are of my personal views. It should not be treated as an advice. And we have taken these views either from the FTA decisions, FTA illustrations, etc. So those are the personal things, so not to be treated as an advice. Today we are dealing with these topics about the free zone regime, the free zone person, qualified free zone person, qualifying income and activities, what are excluded activities, de minimis, substance, which is most important part and most important condition which many free zone company lacks, and many free zone company do not satisfy this. So this is, I think, going to be a game changer condition for everybody to satisfy these substance condition. And then we have a list of free zones and what are the compliances to be made by the free zone. So this is the main agenda. I think the overview, I have already given you that overview. So all free zone companies are taxable at 9% corporate tax unless they will be a qualified free zone person, what I have already told you. So this particular slide we have already covered. Now, who is a free zone person? So the law defines that any judicial person in the free zone is a free zone person, which also includes the branch of a non-resident person registered in a free zone. So this is called a free zone person. From here we can derive that a natural person cannot be regarded as a free zone person. So if Mr. Ayub, instead of staying in a beautiful apartment of Burj Khalifa, if he moves to a free zone like Dubai Silicon, make up a big villa there, stays there, still he cannot be classified or he cannot be regarded as a free zone person because he is a natural person. But yes, he classified as a free zone person. So that is the first thing, that individuals, natural persons, cannot take the benefit of the free zone person. However, for unincorporated partnerships, are also subject to, or they can claim the benefit of the free zone. As far as sole establishments are concerned, it is very clear that sole establishments are not taxable as such. They are taxable in the hands of the natural person itself. So when natural person is not given the benefit of free zones, so the sole establishments will also not be given benefits of the free zone. As far as this unincorporated partnerships are concerned, so unincorporated partnerships are of two types. Either they elect to pay tax in their own hands, or they may pay tax in the hands of the partners. So when we elect to pay tax in the hands of the partner, the income goes in the hands of the natural person. So for that purposes, the benefit of free zones is being denied to them. So there is no benefit to be given to them. However, when the unincorporated partnerships are taxable as such when they are paying taxes in their own hands. So there is question which have come whether they will be eligible for a benefit of the free zone regime. There are mixed views of people. So there are few people who are saying yes, the benefit is available because when the unincorporated partnership is taxable as such, then it becomes a judicial person. And if it becomes a judicial person, then in that case, the benefit of free zone entities should be given to this unincorporated partnership. However, few other people have a different view. They are saying no, because benefit may be passed on to the natural persons, and the benefit should not be given to these unincorporated partnerships. So there are two views. According to me, if unincorporated partnerships are taxable as such, then benefits should be given to them. However, we do not have any clarity from FTA. So let the FTA clarify those things, and then we will see that whether this benefit is there, where benefit will be available, or it is not available to these unincorporated partnerships. Next, for a free zone company or for a free zone person to be claimed or to be regarded as a person who is claiming the benefit or who are eligible to claim benefit, the company, the judicial person need to satisfy these 5 conditions. So once they satisfy these 5 conditions, then they will be treated as a qualifying free zone person. So all the benefits will be eligible or will be given to a qualifying free zone person. Till the time we do not call as a qualifying free zone person, we cannot claim the benefit. Now, what are those 5 conditions? You see on the slide, the 5 conditions are: first, the company has to maintain adequate substance. So substance is very important, that I have also discussed in the beginning. Second, company
Recording in progress.
The condition number 2 is that qualifying income should be generated by this entity, or we say that the entity should derive the qualifying income, and these qualifying incomes are only income which are exempt or which are not subject to corporate tax. Now we will deal with it, what is the meaning of qualifying income, etc. So that also we will deal in detail. Condition number 3 says that the company, the free zone company, should not themselves elect to pay 9% tax. So the way I begin this session, that I have an option to opt for 9% tax as a free zone company. So the third condition says that the company who is a free zone company should not elect to pay 9% tax. The moment they elect to pay 9% tax, cannot claim the benefit of the free zone. So that's why third condition to be satisfied is that yes, this company should not elect to pay normal 9% corporate tax. Fourth condition, all the transactions with the related party from or to the free zone company is subject to transfer pricing regulations, and they need to maintain adequate documentation prescribed by the law, which is nothing but a local file, master file, and in some cases CBCR as well. So those documentation, those study, those local file, master files has to be maintained by all the companies who want to claim the benefit of this transfer pricing. So that is what is important that we need to take care. The last condition is that every free zone company who want to claim the benefit, of this free zone regime has to maintain proper books of accounts, and the same needs to be audited by a auditor, by a qualified person who is allowed to audit those accounts. So So those are the 5 conditions. So I just repeat those 5 conditions. First is the free zone company has to maintain a substance, and the substance has to be adequate substance. We'll discuss in detail what is the meaning, what is has to have an qualifying income. The company should not elect to pay 9% tax. All transactions with the related party are subject to transfer pricing. And the last is company has to maintain proper books of accounts, and the same has to be audited as well, irrespective of the limit. So all free zone companies, those who are willing to claim the 0% tax benefit from the corporate tax has to get their accounts audited as well, irrespective of their turnover, irrespective of their profit level. So that is the mandatory thing which have been qualified by the law, by the decree law. And the last is about the de minimis. So the person should not exceed the limit of de minimis requirement, that we will deal it at the end. So those are the 5 conditions. The moment we have and we discuss and we fulfill those 5 conditions, then only we can, or as a free zone company, people can claim the benefit of the free zone, or they can claim the benefit of 0% corporate tax. So friends, if you have any questions, so we can discuss you can write the question in the chat box. May I have Uttam or Ayub, anybody is there who can help me out with the question, or Kasim? So please read the chat box, because I may not be able to read the question. So if you can, if you can raise the question for me. So friends, anybody who have any questions, so please write it in the chat box, so that we can receive it. I welcome CA Naveen Goelji also from Saudi Arabia, who have joined us in this webinar as well. So welcome, Naveen bhai. Kasim, is there any questions, or should I move forward?
Yes, there's a question from Nitin Sani ji. All these 5 conditions are mandatory, or de minimis clause is also necessary?
No, sir. So all 5 conditions are mandatory. De minimis clause is last. If we satisfy all 5, then we will see de minimis. Otherwise, if we fall, or if we do not qualify any of the condition, forget about de minimis. So these 5 conditions are mandatory, and all conditions has to be satisfied.
May I?
Yeah, please.
So in that sense, we can say that first we have to see all these 5 conditions, and then to check for the de minimis. So in simple way, all these 6 conditions are mandatory.
No, 6 condition is only when you have a qualifying income or non-qualifying income. So it might be possible that there is a free zone company who have only qualifying income. So in case a company have 100% qualifying income, so there is no de minimis conditions to be checked or satisfied. So de minimis will come only in those cases when the company has qualifying as well as non-qualifying.
Okay. So in that way, if there is a both income, then we have to check de minimis.
Okay.
Then there is a question, what is de minimis? So we will be dealing it by the end of the session.
Okay, no problem. Next.
And then there's another question from Mr. Lalji bhai, that free zone mean all free zone or designated free zone only?
So as of now, for the basic conditions to be satisfied, there is no difference between a free zone or a normal free zone or a designated zone. So that difference is there, subject to only one condition that we will deal with when we discuss about the qualifying income.
Mr. Gaurav Gupta has posted a scenario. The first year select qualifying free zone person. Second year normal regime, select not fulfilling condition. Third year fulfill the condition. Can select QFZP?
Sir, Gauravji, theoretically what you said is correct. That yes, I can choose to pay tax in 1 year, and myself I can opt for another year. So as far as prima facie theoretically is concerned, there is no bar on it. So what he says that year 1 I may elect to go for an exemption, and I satisfy all these 5 conditions, I can do so. In the year 2, this might be possible that I failed certain condition and I myself opt for 9% tax. So that's why I paid 9% tax. Maybe I may be below 375, I may be above 375. In the third year, can I again go and take the benefit of the exemption? To my mind, theoretically, yes. Practically, because you do not fulfill the condition in the year 2. So that's why you are barred from for next 4 years as well. So FTA needs to clarify this particular situation, because they said if you do not satisfy one of the conditions, then you are barred for the next 4 years. So in this case, you do not satisfy condition number 3, that in the year 2 you yourself opt for 9% tax. So from that perspective, I believe you will be debarred from the from taking that benefit for the future years. So that's my understanding, but maybe FTA will clarify and will come up with something else. But from my perspective, you cannot. Yes.
There's another question from Mr. Harsh Kedia, that is it mandatory audit disclosure reporting for eligibility?
Mr. Harsh, as of now, the FTA have not come up with any rules or regulations in detail related to what TP documentation to be maintained and to what extent. So they just come up that in the case of a normal company, if your turnover exceeds 200 million dirhams, then only you are subject to maintain the adequate documentation and file it before the FTA. As far as the free zone is concerned, the only condition mentioned is that you have to comply with the arm's length principle and transfer pricing documentation. Whether this documentation needs to be submitted to FTA, whether some additional forms or requirement will come to the FTA, that nothing have prescribed as of now. We presume that because government is giving or the FTA is giving exemption to the free zone companies, so this limit of 200 million may not apply to a free zone company. Nevertheless, whether it is to be filed or not to be filed, but the law is very clear that the SSC, that the company, free zone company who want to take the benefit of free zone exemption has to comply and maintain adequate documentation. So during the audit, the FTA may come and they may ask you to provide these documentation. So that's what we believe. Can you move further?
Sir, I
Yes,
have
sir.
one query in this particular case where you have said that this documentation will be clarified by FTA later on. So in any case, even a disclosure form is also not required if this 200 million dirham turnover
Sir,
condition.
FTA have not come up with any form to which they have prescribed to file it. So
Okay.
as of now, there is no form available. The FTA have not notified. However, keeping the international experience in place. So
Right, sir.
most of the countries, including India, US, UK, Singapore, apart
Yes, sir.
from the return of income, what one has to file, they ask the SSC to file an additional information about these related party transactions where transfer pricing are applicable. So keeping that international experience in place, and we take the example of Saudi Arabia also. In KSA also, we are required to file a separate form for all the related party transactions subject to transfer pricing. Even in KSA, that is to be certified by an auditor as well. In India also,
Right.
this is to be certified by an auditor in those cases.
Right.
So maybe in times to come, this kind of requirement will come. As of now, FTA have not notified or have given any this kind of an information. But yes, they will come. Okay.
Okay.
Mr. Anwar is asking, CT is already implemented now for the free zone. If not, when they
Yes.
are going to start?
Sorry, if
If not, when they are going to start?
we have 9 months from the end of the year till date we need to file it. So normally the year tax year have started from 1st January. In the due course, the FTA may come up in the anything. So I don't belong to FTA, neither I represent FTA. So I don't know. I am like you only, who are waiting for the relevant forms and disclosures. So I think with this, I think Asim,
there's
let's
one more
move
question.
forward. Yeah.
Okay, just the last question is there, so let's address that. Ms. Kirti Agarwal is asking, in case of QFZP, master file and local file is not mandatory.
Who said? I have not said that this is not mandatory. There is nowhere this exemption is given. The only thing is they have said any company exceeding 200 million has to maintain. They have not said it's a mainland company or a free zone company. So meaning thereby every company, whether free zone or mainland, if the turnover exceeds 200 million, they are liable to maintain local file and master file. However, for the below 200, they may ask for a free zone company who are claiming the benefit to make this mandatory. So that's there.
Okay.
Okay. Next, I think this is the qualifying income, which is most important part, which we need to discuss. So, which income are exempt or which income are eligible for 0% corporate tax? This entire set of income I divide into three categories. So, what are these three categories? So, three categories. First category says that a free zone company earning income from another free zone. I have not said qualified free zone company. I said one qualified free zone company or company who want to claim the benefit of 0% earning income from another free zone company. This is one category. Second, free zone company earning income from a non-free zone company. Non-free zone company includes your mainland companies. Non-free zone company also includes the income which the company have derived outside UAE. So they may sell their goods or services to Oman, they may sell their goods or services to Qatar, KSA, etc., etc. So those companies, those jurisdictions are also non-free zone jurisdictions, even though they are outside UAE. Many people have come to us, or many persons have asked me, sir, if I have exported my goods to Africa, if I exported my goods to Qatar, so this is also outside UAE, so that should be regarded as a free zone. Answer is no. Free zone means only the designated zones which have been prescribed by the law, by the income tax, by the corporate tax law to be classified as a free zones. So those, if you are earning income from those companies or companies situated in those free zones, then only it is classified under category 1. If it is not classified under that particular zone, then in that case, you can easily say that the income that you derive is from a non-free zone area or area which is regarded as a non-free zone. Third category, after the repealment of the earlier cabinet decision, so there is a new income which they have come up, which is called as the qualifying income derived from ownership or exploiting of a qualifying IP. IP is intellectual property right. So that is also very important, because whenever we are discussing about free zone, so mostly our discussion remains with the first and second. But the third, which is very, very important, is the qualifying intellectual property. And if the free zone company is earning income by way of an ownership or giving a right to use to somebody, then those incomes are also classified as a free zone income. And this particular income, please friends, this is very, very important to understand. If somebody is deriving income from the exploitation of qualifying IP, then that income may come from free zone, may come from non-free zone, may come from outside the country as well. So any kind of income which is attached to a exploitation of a IP, intellectual property, that earned by a free zone company, provided they satisfy the other four conditions, entire income is also exempt. Meaning thereby, if there is a software company who is having a software license, so let's say they have a X software, assuming SAP, assuming Oracle, assuming any other licensed software where these companies are giving license to other companies, either in a free zone or on a mainland or outside UAE. And from that license, they are earning the royalty income. So if that license, if that software is covered under the definition of qualifying IP, then whatever royalties company is deriving, provided the company is a free zone company, then this is an income which we call as a income derived from the exploitation of the qualifying IP. Hence, they are also exempt. They are also not liable to or not subject to the corporate tax. So that is very, very important part for the IP regime. So similar kind of a regime is available in Netherlands that we call as an IP box regime. So this regime is also very important and a game changer for UAE free zones. I don't know which free zones allow this kind of a royalties, but there are a couple of free zones which I know which they allow to ownership of the IPs. So the moment you are owning the IPs and you are deriving income from those IPs, so those incomes are also subject to 0% corporate tax. Then the last part, which is we'll deal it last, that if your 1, 2, and 3 income from free zone, income from non-qualifying free zone, and income from ownership. If there are any income which is other than these three, if anything which is not covered under the third name is there, then we check the qualification of the de minimis criteria. If we fall within the de minimis, then even the non-exempt income will also be exempt. So that is what we call as a de minimis criteria. But that we will deal it later. Now let us come back to first. When a free zone is earning an income from another free zone company, everything is exempt. So whatever a free zone company is earning from another free zone company, all income of whatsoever nature is exempt from tax or is eligible for an exemption, except income derived from certain activities which are excluded activity. So they have prescribed 10 activities to be an excluded activity. So if you are covered under those exclusions, then it is not exempt. Otherwise, all income is exempt. Second, when a free zone company is earning income from a non-free zone company or maybe from an outside UAE company, everything is taxable. So whatever income a free zone company is deriving or is derives from a non-free zone company or outside UAE company, everything becomes taxable and subject to corporate tax at the rate of 9%. However, there are certain activities which they prescribe. These activities are if the free zone company derives income on account of these activities from a non-free zone company, from a company which is non-free zone, then we will give you the exemption. So then an exemption might be given to those incomes which are derived from a non-free zone. So the general rule is free zone to free zone exempt except the excluded activity. Free zone to non-free zone, everything is taxable except certain activities. And IP, if it is a qualifying IP, then everything, whether to a free zone or a non-free zone, everything is exempt. And the last we will see with the de minimis criteria. That is what we are going to see. Now, let us go and see about what are the qualifying income or qualifying activity as far as this management decision 265 is concerned. Now, what is this management decision 265? So before we go into this particular subject, let us understand what are these qualifying activities. These qualifying activities are those activities which even if which a free zone company is doing this activity with a non-free zone company and still eligible for an 9%. So what I am saying is that these activities, even if a free zone company is doing or even if a free zone company is earning income because of these activities from a non-free zone company, still they are exempt. And then in both the cases, there are excluded activities, so that we will deal it for both the free zone as well as the non-free zone companies, that we will deal it later. Now, what are those activities? So I divide this activity into 4 categories. So the first category of activity is relating to the goods, trading or distribution or manufacturing. The first item they say that any manufacturing or processing of goods or material. So if a free zone company is doing a manufacturing activity in a free zone, doing a processing of goods in a free zone and selling those goods and materials, whatever they processed goods or the whatever is the manufactured goods, if they sell it from the free zone to a non-free zone, then also it is eligible for an exemption. So that is basically to promote manufacturing activity in a free zone or the processing activity in the free zone. They have specifically allowed this particular activity to be to be conducted from the free zone, and this is eligible for 0% tax. Second, please see it very carefully. Here the difference comes. The distribution of goods or material in or from a designated zone to a customer that resells such goods or material or part thereof, or processes or alters such goods or material for or part thereof for the purpose of sale or resale. That is very, very important. Now, what they say, distribution of goods in or from a designated zone. So they have not said free zone. So they said designated zone. Now, what is the meaning of designated zones? So the meaning of designated zones, they said, designated zones are those free zones which are designated under the VAT law. So those free zones which are designated free zone for VAT purposes. So these are generally called as those free zones where you can have the bonded warehouse, or these are the free zones which are either on the ports or airports. So where the goods first come up, so where you can have a bonded warehouse, etc. So this particular zones are called as designated free. So this free zones, if there is a company and that company is distributing the goods or material in or from that free zone, then it is called as a designated free zone. So in the earlier decision, if we see, so there is a definition of designated zones. If they're selling goods through or from in or from the designated zone, then there was a condition that the same has to be used or resell, or the same has to be processed, alters, etc. But now in the repealed cabinet decision, or sorry, management decision, they have said that if there is a distribution of goods or material in or from the designated zone, then it is more than enough, and you can claim the exemption from that particular activity. So that is for the goods. Next is with respect to certain activities which related to logistics services. So when somebody is doing a logistics services, somebody is doing, or some company is doing an ownership, management, and operation of ship, and that ship is there. You are taking freight, etc., or you are doing a charter, etc. So those incomes, any activity in relation to financing and leasing of the aircraft, including any engine, etc. So if you are leasing the aircraft, or if somebody is financing the aircraft, so that particular activity is also classified as a qualifying activity. And last, which is very, very important, is trading of a qualifying commodity. The first discussion I said distribution. So it has to be distribution from in or from the designated zone. But if I am doing a trading of a qualifying commodity, then in any free zone, whatever is the free zone, that if I am doing a trading in the qualifying commodity, then it has to be same. Now, what is the meaning of a qualifying commodity? So they have defined under this management decision of 265 of 2023, they have decided in the new decision that after repealment, the decision came that qualifying commodity means metal, gold, silver, etc., mineral, coal, iron ore, etc., energy, any kind of energy, petroleum, etc., agriculture commodity. So any commodity like wheat, rice, anything in spices, anything which is an agriculture commodity, including fruits and vegetable. But they said only those metal, mineral, energy, and agriculture commodity that are traded on a recognized commodity exchange market in raw form. So if something is automatically being traded on an commodity exchange anywhere in the world in the raw form, then, and if you are doing the trading of that qualifying activity commodity from a free zone, that is allowed. Now let me take an example. Gold. So if some company from DMCC is trading into gold, gold is a commodity, is a metal which is generally traded on a stock exchange. If you are selling raw gold, means a brick, a bar, etc., then this trading is exempt, is called as a qualifying income. But if you are making jewelry, then selling it, then, and you are in DMCC or any other free zone, Maidan, etc., then no, you are not allowed. Company is not allowed to trade or is not allowed to claim the exemption from free zone. If the same company manufactures the jewelry is being traded from a designated zone, then it comes under the first limb, which is distribution of goods or material from in or from the designated. So that is what is the difference is. So if it is a qualifying commodity and somebody is doing pure trading of that qualifying commodity, he is eligible to do this trading from any free zone, anywhere, any free zone, provided it has to be listed or it has the commodity, the metal, etc., has to be listed on a commodity exchange. One more thing, friends. It is not important that you buy and sell. You trade this particular qualifying commodity through a stock exchange. So you may sell this gold to me, and you bought this gold from anybody outside party. But the gold is gold, because gold is a metal which is listed on a commodity exchange, that is more than. So that's how it is an important definition which have been added with the new management, new ministerial decision. So you should be aware about that. This is the second set with respect to logistics, shipping, aircraft leasing, and trading of the qualifying commodity. So that is what we discussed. The third category comes is the holding of shares or other security for investment purposes. So if somebody is holding those securities and shares for investment purposes, then capital gain and dividend incomes are exempt. Now they said investment purposes means somebody who holds the security for at least 12 months period. So if somebody is holding those security for 12 months period and they are receiving any dividend, they're getting any capital gains from sale of those securities in the hands of this free zone company, it is deemed to be exempt. Now, someone of you may ask me, then I have a participation exemption available. So that participation exemption also says that if I participated in any company for more than 5% of the capital, then I will be exempt from dividend, and as well as I am also exempt from capital gains. And one more person says that any dividend received from a UAE company is also exempt. Why I require this particular benefit? So friends, in those cases where participation exemption is not available. So I'm holding the shares of a Bahrain company. I'm holding the shares of the Cayman Island company. I'm holding the shares of the BVI company, or I'm holding the shares of any company where the corporate tax rate is below 9%. So in those cases, the dividend is not exempt. Participation exemption is not allowed or not available. So, but if you still want to take the exemption, then a free zone company, if they hold those shares for more than 12 months period, so they are subject to 0% tax. So that's why many people might hold the shares here. Similarly, all those people who are doing an active trading, so those who are daily buying and selling the stocks from the stock exchange. They may also do it and classify here. So all those stocks which they buy and sell and the holding period is more than 12 months period, so then they can claim the benefit of the exemption on the capital gain as well under that particular category. So those may think of doing like this. Then next it says reinsurance services by an insurance company, fund management services or a wealth management or an investment management services for which a license may have been given by the central authorities, maybe central bank or any other prescribed authorities. So those incomes which have been generated by the fund managers, those incomes which have been generated by the insurance company from the reinsurance business, etc. So those are also subject to 0% corporate tax. So that particular income is also not subject to tax. However, there is an exception to the rule. The exception is that the reinsurance as well as this fund management services, etc., should qualify certain conditions which are subject to conditions prescribed by the regulatory authorities. So those conditions you have to fulfill. Once you satisfy the regulatory authority conditions, then it is okay. It is not taxable in the hands of the companies. The last part of the qualifying income is the treasury and the financing services given to related parties. Please, friends, mind it. Treasury function or a financing function done for non-related party, and the company is earning income out of that is subject to tax. But if this treasury and financing activity is done only for the related parties, then it is exempt. Similarly, a headquarter services which have been given to all the group entities, which are related parties, then that headquarter services are also subject to 0% tax. And the last, they said any activity which are ancillary to fulfill the main activity or any activity which is there, then these are also classified as a activity which is qualifying activity. The example could be I'm running a business. I'm doing a qualifying income from any of this. My surplus got deposited in a bank, and from that surplus I earned an interest income. I earned some other income. So in my humble view, that these interest income, even though it is not written any of the qualifying activity, but it will cover in the last limb of this, that this activity is ancillary to my main activity. Hence, I should be given that benefit of qualifying income over that particular interest income as well. So that's my personal view, that this kind of a benefit can be claimed on this qualifying activity. So a free zone company, if they are earning from these activities from a non-free zone company, then they are eligible to claim 0% with 0% corporate tax. So this is the crux of the story. Last part of it is excluded activity. So what are the activities which are called excluded, for which benefit will not be given, whether free zone to free zone or free zone to non-free zone, in both the cases. So again, management decision 265 talks about this particular income, about what is the free zone, what are the excluded activities for which the benefit will not be given to the person. So they prescribe these 5 activities. Five activities which are called as the excluded activity. The first is any income derived by a natural from a natural person. So if any free zone company, so for example, a free zone is providing logistic services. Logistic services are a qualifying activity, but they give this logistic services to an individual, to a sole establishment. Then in that case, that logistic service is not a qualifying. So this is any services given to an individual or any income derived from a natural person. In that case, it is not regarded as a qualifying income. Then I think someone will say, sir, you just called as the wealth management services portfolio management services, etc., are classified as a qualifying income. But most of the time, these activity of wealth management and investment management is generally given to individuals only, to natural persons only. So then, in that case, what will happen? So either we will not be eligible for this benefit. Sometimes the shipping company, in the shipping business, individuals also book cargo. Some individuals may also board the ships. So in those cases, what happens? They will not classify as a qualified. In case of a, so if I buy an aircraft and my aircraft is being financed by a company in free zone, so what will happen to those? So this is no problem. Barring few exceptions, the exceptions that they have prescribed is the shipping company, fund management, wealth management, and aircraft. If these four activities are given to an individual and income is derived from them, they are not regarded as excluded activity, meaning thereby company will be eligible to claim the benefit of 0% corporate tax. But in general, any income derived from the natural person will be deemed to be not exempt, will be deemed to be fully exempt. Next, any income derived by banking activity. So any income, when we are deriving this income from a banking solution, from an insurance activity, except the reinsurance. The reinsurance we have already covered, or any other activity of financing and leasing. So those activities are also not eligible for exemption. So if any bank is there, any insurance company is there, any non-banking financial company is there and doing these activities, except the reinsurance business. So all those activities are also excluded activity and subject to 9% corporate tax. So that is there. You cannot, or the company cannot claim the benefit of the exemption. So that's what they have done. Next, any company, a free zone company, if they are deriving income from immovable property. So if they are leasing out the immovable property and that immovable property is being leased for the purpose of other than commercial lending. So if a company is there who have a business complex and they have a commercial establishment, they lease it to another person, and it is allowed, no problem. But if they have a residential unit and those residential units are given to companies or guest houses, or they may have a hotels, and that hotel is given to the companies either in the free zone or outside free zone, that doesn't matter. So those income from that residential units or income from these hotels, guest houses, etc., are also excluded. So they are excluded activity, meaning thereby they are subject to 9% corporate tax. So that is what one has to check it. So these activities are also excluded activity. And last, they said any activity which are ancillary to these other activities are also called as an excluded activity. So now let me reiterate what I said, that free zone to free zone, everything is tax-free except these activities, which is for natural person, banking, insurance, NBFC, to residential house property, including hotels or any ancillary. Free zone to free zone, everything exempt except this. Free zone to non-free zone, only the qualifying income that we discussed, but these activities are still excluded. So even if these qualifying activities are generated from them, these are still not eligible. Any other activity other than qualifying activity are also subject to 9% corporate tax. So that is what is important. One has to check, one has to see and check into it. Any questions till now? Otherwise, then I move to
Yes, sir, there are a few
and
questions.
other qualifying intellectual. Yeah, please.
So there's a question from Nitya that law states that QFZP that fails to meet the conditions during a tax period shall cease to be a QFZP. For the
Correct.
first year, how would this be assessed considering that a company is yet to declare itself as a QFZP?
No, it is not like that. It is like that either you yourself have declared that you do not satisfy the condition, that's why you are paying 9% tax, or when somebody declares that they are QFZP satisfying all the condition, but during the audit by FTA, it have been concluded that you failed to do that. So that is applicable in those cases. Next.
Okay. There's another question. High C sales is covered under distribution.
Distribution from a designated zone. So only these high C sales conducted through or from designated zones are classified as qualifying income.
The other question from Ms. Shivani. Business consulting services by free zone company to other countries, are they exempt?
No, it is not exempt, madam. I have already told you, when you are doing a business consulting services from free zone to a company outside UAE that is deemed to be a non-free zone, comes under the second category. And in the qualifying activity, business consulting is not mentioned anywhere, meaning thereby all business consulting services given by the free zone company are subject to 9% competition.
Sir, Avinash sir, may
Yes,
I?
sir. Yeah, please.
As you said that this distribution of goods from and in from designated zone. So it simply mean goods have to enter in designated zone,
No,
or third
no.
port shipment will also cover.
Third port shipment will also cover, but the decision and the core business generating activity should be mentioned in the designated zone. So when we go to substance, we'll discuss with in a detailed manner.
Okay.
There's a question from MBG, whether distribution of goods to customers, whether they do not enter the designated zone but are exported directly outside UAE by producer to customer, would that be a qualifying income or not?
No, but if they are manufactured in UAE or they are manufactured outside UAE. In the outside UAE scenario, if they have done it through designated zone, allowed. But if they have done it within the if they are manufactured from in the UAE in any free zone, that is also exempt. That we need to see the precondition, what exactly the nature and facts of the case. Next.
There's another question from MBG Corporate Tax. If a QFP becomes a non-QFZP,
MBG person, you must disclose your name. Why you are disclosing the identity of your company? Okay, tell me, Kasim.
if a QFP becomes a non-QFP in a tax period, they can avail the participation exemption regime.
Of course, yes. So once you are a non-QFP, then all other benefits are eligible. So you can claim losses, you can claim participation exemption, you can take benefit of the losses, etc. Everything is available.
Okay.
Next.
There's another question from Mr. Saad. Are there any specific incentives offered by the free zone that differ from each other?
I think every free zone have their own incentives and benefits which are restricted to the respective free zones, nothing to do with the corporate tax. So as far as this corporate tax is concerned, we divide it into two categories. One is designated free zones and a normal free zones. And trading activity or the distribution activity from a designated free zone is exempt. A non-designated free zone is not exempt. Other than that, everything applies to all, whether designated or a non-designated, as it is. However, if some particular free zone have given certain benefit, then that is restricted to that. So for example, I heard that DMCC is giving a professional license. Other free zones are not giving. So this is a particular free zone who have giving the benefit, nothing to do with corporate tax.
Okay.
Next.
There's another question from Mr. Nikhil. If company situated in Ajman free zone, invoicing to company in another free zone, but goods are moving high seas, will it be treated as non-qualifying income?
Come again.
If a company situated in a Ajman free zone, invoicing to another company in another free zone, but goods are moving high seas, will it be treated as non-qualifying income?
No, it will be a qualifying income because Ajman free zone company is earning income from another free zone company. So all incomes are, and this particular income is not an excluded activity. So meaning thereby whether goods are coming to free zone, coming to UAE or not coming to UAE, in both the circumstances, this income is covered under the category 1 and it is not given in the excluded activity. So meaning thereby it is eligible for 0% corporate tax.
Right. And what will be the scenario if the invoicing is done to the mainland company and the goods are moving high seas?
Then in that case, we need to see whether Ajman free zone is a designated zone or not. If answer is yes, Ajman free zone is a designated zone, and the Ajman free zone company is making invoice of high seas in the name of a mainland company, then it will be deemed to be a distribution in or from designated zone. But if Ajman free zone is a non-designated zone, then it is taxable.
Okay. Ms. Shivani is asking if the business consultancy company in free zone is having a surplus and it invests that surplus in US markets. What will be the treatment of the income of that surplus?
Madam, I think if you are doing a proper treasury or the investment function of putting these money into a stock exchange in US, then it may not be regarded as ancillary activity. But if you are normally buying the treasury bills or investing in a fixed deposit, etc., then it may be classified as ancillary activity. The moment it is classified as an ancillary activity, the interest or any income is exempt. But if it is not regarded as ancillary activity, then it will be classified as a non-qualifying activity subject to de minimis and taxation. So investing in a US stock exchange for shares, I think it is taxable. Next.
Okay. Mr. Lalji Bhai is asking DMCC to DMCC jewelry and gold and diamond trading is 0% tax.
No, diamond trading is not 0%, because diamonds, I believe, to the best of my knowledge and understanding, diamonds are not traded over any commodity exchange. Gold, yes, but diamonds are not. However, if you are selling to another DMCC, so DMCC to DMCC, that covers under category 1, which is one free zone to another free zone, and it is not excluded activity. So meaning thereby it is eligible.
Mr. Dhaval is asking DAFZA, JAFZA is 0% tax. Rest all is taxable.
Jabza, why?
I mean, looks he's asking for the designated free zones.
No. So, sir, there are many designated free zones. Not only Zabza, Davza, there is the Hamria, there is Abu Dhabi Airport free zone, there is Kizat. There are many designated zones. Even in the Keys, there is a free zone. Ajman, there is a designated zone. So those designated zones, if you do a distribution, then it is 0%. So that's what we have to do. Next.
Okay. There's a question from Kirti Agrawal ji. Is there any supporting document which covers third port shipment and distribution?
I think that is based on the case-to-case basis. So in those cases, I think there is a proper custom documentation which has to be maintained for high sea. At least at the port of destination, they require this high sea documentation to be claimed and filing bill of entry. So I think those are the documentation one should maintain.
Okay.
I'm not expert in customs, so I'm not saying that this is 100% correct.
Mr. Abdullah is asking if a company is registered in Medan free zone and it sells its goods to mainland company and mainland company is exporting the goods to outside UAE. Can free zone company claim it sells as zero rated under VAT?
No, sir, it is not a VAT session and I am not a VAT expert. So sorry, I can't answer this query. I may not be knowing the entire VAT provisions. But to my limited understanding, answer is no. However, if the mainland company is having an industrial license, then maybe. And one more thing is Medan is not a designated zone. So when you imported the goods to Medan, or when you bought the goods from Medan in the Medan company, that you already must have paid a VAT. So I don't think that there will be an exemption. But to my humble knowledge, I'm not an expert, so I cannot say that it is 100% correct. Next.
Weng Messina is asking, we are free zone company, and if we purchase chemicals from mainland and export it out to another country, are we become taxable?
Come again.
Uh, a free zone company is purchasing chemicals from a mainland company and then exporting it to another country. Will that be taxable event?
I think it is not a taxable event because you are distributing the goods in or from a free zone, and you are also doing trading. If we say that chemicals must be listed in any commodity exchange, so from that particular aspect, you will be eligible for the benefit of 0% corporate tax. Next.
Mr. Nikhil is asking, short-term capital gain from shares derivatives from outside UAE by a free zone company taxable or not?
Yeah, it is taxable. Short term, I assume it is below 12 months period, so it is taxable.
No more questions.
Okay.
We may continue.
Sir, then we have a de minimis criteria. So before going to that intellectual property, let us understand what is de minimis criteria. So de minimis criteria says that if a free zone company is having a qualifying income which are eligible for 0%, and they also have some income which is non-qualifying income, then they said if that non-qualifying income is less than 5% of the total revenue or 5 million, whichever is lower, then in those cases, the non-qualifying income will also be deemed to be the qualifying income. So that is the de minimis criteria which have been given in the law and in the cabinet decision and the management decision, that how we should calculate this de minimis criteria. However, there is definition that, okay, what is non-qualifying revenue? Non-qualifying revenue, they said any revenue from the excluded activity, being the free zone to free zone, excluded activity. So those 4 or 5 activities that we have told is excluded activity. Any revenue which is coming from a non-qualifying activity, which is free zone to non-free zone. So those, in those cases, there are non-qualifying activity, or any revenue which is coming from a free zone company only, but the beneficiary recipient is not the free zone. So for example, I am providing services to a free zone company, but the free zone company is not the beneficial owner. Somebody else, maybe a mainland company, is a beneficial recipient. So those are classified as the non-qualifying revenue. So that should not be more than 5% of the total revenue or 5 million, whichever is lower. If it is like that, then non-qualifying revenue can also be classified as qualifying revenue and eligible for 0%. So this is what we call as a de minimis criteria, de minimis limit. Then whatever we discuss, it is there that what is subject to 9%. Free zone to free zone, all excluded activity is 9%. Free zone to non-free zone, except the qualifying activity, everything is 9%. Any income which is derived from non-qualifying IP is also 9%, or any income which is derived from excluded activity is also non-qualifying activity. So there is a small situation, actual de minimis criteria that we have given here, that okay, if the qualifying revenue is 115 million in situation 1 and the non-qualifying is 5 million, the total revenue comes to be 120. 5% of 120 becomes 6 million. The limit was 5 million, whichever is lower is 5 million. My actual revenue from a non-qualifying is 5 million. Hence, the entire 120 million is deemed to be qualifying revenue. In the second example, I have a qualifying revenue of 113 million, non-qualifying revenue of 7 million. Again, the total is 120 million. 5% of this is 6 million. The fixed limit is 5 million, but my de minimis is 5 million, but my actual revenue is 7 million. So meaning thereby the entire 120 million revenue is subject to 9% tax. If I fail on de minimis criteria, then entire income will be taxable in the hands of the company. That is also very important to check, that the free zone company should not have any qualifying revenue in that. Now, the last part of the presentation, which will take another 5 minutes or 10 minutes time, is about the substance. So substance is something which is the most important part what one has to see. So the first condition is that all these what I can say, the free zone companies are subject to 0% tax if they satisfy 5 conditions, and out of 5 conditions, the first condition is adequate substance. Now, what is the meaning of substance and adequate substance? So they have described this in the cabinet decision number 100, that what is the meaning of adequate substance. So they say that company, a free zone company, is deemed to have an adequate substance if core income generating activities is situated in the free. So what is the core generating activity? So for example, I am a logistics company. Then my work is to do a logistics business. I might be giving transportation, I'm doing warehousing, I'm doing a document clearing, taking material from here and there. So if those activities, the mere core generating activities is situated in a free zone, maybe someone is, so I have an office outside free zone also, doing some back office operation, doesn't matter. The core generating activities has to be in the free zone with certain parameters to be satisfied, which are 3. One is adequate assets, second is employees, and third is the operating expenditure. So if my core generating activities are there in the free zone, but I do not have assets, I don't have laptop, I don't have anything like that, either my own assets or I should lease it, rent it out. So even if I am on a flexi desk, I am on a rented offices, but the asset do not belong to me, but I rent it for me. Okay, no problem. I do not have people, and the person that I have are not capable. So I put my 1 PM in the free zone and say that I have adequate substance. No. So there has to be qualified full-time employees employed in a free zone to be classified as the adequate substance. The last part is that whatever operating expenditure that you are doing, so those expenditures has to be commensurate with the activities of the free zone business, what you are doing. So you need to have a core generating activity, and those have to be represented and matching with the assets that you employ, people that you employ, and the expenditures that you have. Now, there is a possibility that you may outsource any of the activities to another free zone company. So it may be within the group, it may be outside the group. So for example, I am doing an accounting services for free zone companies. So let's say I am there in DMCC and I am doing accounting for only DMCC companies. And those accounting is not done by me in DMCC, but I have in Medan, I have in the Keys unit from where I am providing these services. So there may not be an asset in DMCC, there may not be employees in DMCC, there may not be much expenditure in DMCC, but same thing is present in the Keys or any other free zone. So then they said, okay, no problem. If you have outsourced this activity to another company in a free zone, may be related, maybe may not be related, but the supervision of these activities should be from DMCC or should be from that free zone only. If you maintain these kind of structures, if you can show to the satisfaction of the FTA that yes, this is the way business is behaving, this is the way the business is running, then it can be classified as adequate substance being maintained. And the moment adequate substance is being maintained, then you are eligible for 0% corporate tax rate. So that is there, that will be regarded as the adequate substance being created by the free zone company. So other things, what are the compliances to be done? Registration for the free zone entity should be done. Every free zone company needs to comply with transfer pricing and file return of income, and they have to give an audited financial statement based on IFRS. So those are the compliances what one has to do. So there are some list that we have prepared about the free zones. So these are all the free zones which are there, which we call as a designated zones. So these designated zones are there where the distribution of goods in or from the free zones are exempt. These are other free zones which are not the designated free zones. So those free zones are also there. However, for the corporate tax purposes, the government, the FTA may notify any non-designated free zone also as a designated free zone. But till date, nothing has been notified. So this is all from my side on this free zone. And now I open the floor for any questions that you have. So anybody may raise their hands and then they can start asking questions. So we have about 20 minutes, 15 minutes time to discuss all the questions.
There's a question from Mr. Nikhil. If accounting and support services outsourced to a company outside UAE, then will it be okay?
No, it is not okay. So they have very categorically said that these services has to be outsourced to another free zone company in a free zone, not outside UAE. However, only one exception to the rule is with respect to the qualifying IP. IP may be produced or the expenditure on IP may be done outside the country. But other than that, everything has to be in the free zone. I have not taken in detail about IP because that is too technical. Maybe we will have separate session only on IP.
Mr. Subramanian is asking income from SaaS services, position of income of software companies who earn income from sub-licensing of software from parent company or other vendors or cloud services to both mainland and from export of services. Are both treated as qualified income, or income from mainland will come under different treatment query from outsource global?
Sir, in that particular circumstances, I think when you are giving a SaaS services, what is important is whether you have a qualifying intellectual property or not. If you have a qualifying intellectual property, what is the meaning of qualifying intellectual property? They are defined under the cabinet decision is any patent, copyright, or any right functionality equivalent to a patent that is both globally protected through an IP or similar approval is given by any authority, and that includes the protection grant to the generic material or something like that, any kind of a pharmaceutical product, etc. That is called as a qualifying IP. It does not include any marketing relating IP, is like trademark or brand name, etc. So I personally believe those SaaS services, particularly those SaaS services, is not a qualifying intellectual property. So only the licensing part may be classified as a qualifying income. Other services which are SaaS, I don't think they are covered under the exempt. Yeah, Radhika ji, I think you have a question.
Thank you, sir. So, sir, I had a query that, when we have clients who are having the distribution function in UAE, we generally have this query of, when we are supplying the goods under high sea sales or third port shipment. So, sir, can we give a clear answer to such, sir, such queries from the clients? Because for the supply chain management, because for the logistics and for the cost saving purposes, sir, they say that it is not practical that, we have the first goods entered into the designated zone and then they move out of the designated zone. It is always practical that they're directly exported to the customers outside UAE. In most of the cases.
I believe,
Yes.
Radhika ji, if they're doing it through a designated zone, we can safely say, yes, it is exempt. Because till date, there is no adverse view or notification from FTA. From a non-designated zone, it is taxable, but from a designated zone, it is not taxable. And that is also being reflected in the paper that FTA have come up for a public comments. We are still waiting a guide on free zones by the FTA. Only after the release of the guide it is clear. But I believe a third port shipment or a merchant trade or a high sea sale is regarded as a distribution in or from designated zone and eligible for an exemption.
Okay, and sir, in such cases, we can, satisfy the thing that the management of such activities is being done through the designated zone.
Obviously, I have told you,
Okay.
for generating activity or business generating activities has to be in the free zone. Then only we can claim those benefits.
Then, sir, there is another question that, sometimes we invoice to the customer who is in the free zone, but ultimately the goods are transferred to another branch or maybe another location of the customer, which may be outside of the free zone. So does it matter where the customer is located?
Madam, it was very clear. It is a distribution of goods in or from the free zone. It is nowhere returned to a free zone. Please appreciate this part. Okay.
Sure.
So the distribution has to be from the free zone. Whether it is going to another free zone or to a mainland or to outside UAE, that doesn't matter.
Okay. And if the customer is a free zone customer, sir, then this condition becomes irrelevant also, that whether the goods are moving in or from the designated zone.
Correct. Because in case of a free zone to free zone,
yes, sir,
what you need to see is only the excluded activity. And this particular shipment of goods from free zone to a non-free zone, but you are billing to a free zone entity, does not cover under the excluded activity. So meaning thereby you are eligible for 0%.
All right. Thank you so much, sir.
There's a question from Mr. Amir. What all conditions to be satisfied for transfer pricing? Is internal transfer pricing report prepared by the management is sufficient, or there are any other conditions that need to be complied with?
Sir, as far as transfer pricing is concerned, that is always the sole responsibility of the management to prepare the adequate documentation and reports. However, many times management outsource this particular function to somebody outside the organization because it is a technical subject and you may require a professional help or it. But if as a management they are fulfilling all the transfer pricing regulations and internationally accepted principles of transfer pricing, then there is no other requirement which needs to be satisfied other than this.
There's a question from Ms. Shivani. If you have a residency in UAE and turnover less than 3 million, but have other income due to trading in US market, will my company be exempt?
Sorry, come again.
If someone is having the UAE residency and the turnover is less than 3 million, and they have an income from trading in US market, will the income of the company be exempt?
No, why it is exempt? The aggregate turnover should be less than 3 million and the income from US market, nowhere I have said it is exempt. It is always taxable. That includes the turnover of 3 million. If overall it is less than 3 million, then you may go for a small business relief. However, a qualifying free zone company cannot claim that small business relief. That is, they are prohibited. Next.
What are good materials to read to get detailed understanding of the corporate tax?
The good material is FTA guides, FTA law, FTA management decisions and cabinet decisions and other things. And you may refer my book. That is also there, which is the material. Or there are other books also available in the market. So those all are good material. Next.
There are no more questions. We may.
Radhika ji, you want to ask one more? Yeah.
Yes, sir. We have one more question, sir. This is not related to free zone, but I wanted to ask, sir, that is there any clarity on, in case of non-residents who are operating through branches in UAE? Sir, in case of non-residents. Yeah. So, sir, there is a query that, there are non-resident companies who are operating in UAE through branches. So, sir, we wanted to know that, who is required to take the registration in such cases in UAE, whether
the foreign company, the foreign entity.
The branches are not required to take separate registration, sir?
No, branches are not a separate legal entity. Only the head office is required to take a registration. Even if there is a company who is having branches in free zone, non-free zone, Abu Dhabi, etc., single registration is required. Because branch do not have separate legal entity. So only the foreign company has to obtain this.
And sir, what would be the timeline? Because the notification that they have released, it states that 9 months from the existence of the P in UAE. So what is this date?
Yeah, so the day is that if you have a branch, then on the 1st January 2024, there is a P. So from 9 months from the existence of P. Meaning thereby 30th September is the last date.
Okay. Thank you so much, sir. Thank you.
Can you please,
Next.
Mr. Lalji Bhai is asking, can you please share some idea for owner salary? Can owner take
Yeah,
commission?
owner, there is nothing called an owner, and manager can draw salary provided he actually provides services to the company. That is subject to the transfer pricing regulation. A reasonable amount of salary can be withdrawn or can be charged by the manager or the employer of the company under the capacity of a manager or an employee, not as a owner. If they charge anything as a owner, then it is not deductible.
So please repeat for consultancy, business and free zone and immovable property related transaction.
So I told you that if you are doing a consultancy business, so Mr. Asim is sitting in front of me. He is having a free zone entity. I am also having a free zone entity. I provide services to Mr. Asim. So I am earning income from another free zone entity, which is not an excluded activity, meaning thereby whatever income I am earning from Mr. Asim is tax free because it is a free zone to free zone transaction, not an excluded activity. Now, if Mr. Asim is having a mainland company and I am billing to Mr. Asim and earning an income, so I am earning an income from a non-free zone activity, or Mr. Asim may have a company in London and I am billing to London company. That is also a non-free zone income. Now I have to test whether this particular income is covered under qualifying income. We have discussed, answer is no. So if it is not a qualifying income, then this particular consultancy income, what I derive, is subject to corporate tax at the rate of 9%. I hope I have given adequate reply through an example. So Mr. Asim, I am raising a bill, so please be ready.
Mr. Nikhil is asking, foreign company which does not have branch but have VAT registration in UAE, will this foreign company need to register for CT?
No, sir, I don't know for what purpose you have taken a VAT here, because I'm not an expert on VAT law, but for getting a foreign company registered in UAE for UAE corporate tax, company needs to have a permanent establishment. So if they have a permanent establishment here, then they should register. If they do not have a permanent establishment, they are not required to do. I don't know why they have taken a VAT registration. There may be an e-commerce company, because in India also there are many non-resident e-commerce company who have taken a VAT number or a GST number in India. If it is for that purpose, I don't think you require a city registration. If there is a PE situated here in some way or other way, then yes, you require a registration. Otherwise, you don't require a registration.
An LLC consulting company where the owner is full-time working, can he take the salary?
Sir, LLC is a separate company, and you are, again, friends, owner cannot take anything. However, manager can. So there may be a person who is the owner as well as a manager. Please don't say the owner is taking. Say manager who is also the owner is taking salary. So if a manager is taking salary for managing the affairs of the company LLC, yes, he is.
Ms. Shivani is asking, what are the deductions that can be
Yeah,
claimed for
wait,
profit?
1 minute, Kasim. Yes, somebody is asking a question.
Yeah, sir. Yes, my name is Lalji Bhai, and I am the manager also and owner also.
Correct.
And,
So you
so
derive, if you derive salary as owner, not allowed. If you derive salary as manager, allowed.
because my visa is partner, so I cannot transfer salary to WPS.
WPS or non-WPS does not impact. So even in my company, I am the 50% shareholder of the company, and I am also the manager of the company. But for what purpose I am taking salary? I am taking salary not because I am the owner. I am taking salary because I am a manager in the company. My other shareholders are not taking any salary. So they are not the manager. I am the only manager. So being a manager, whether WPS rules apply on me or not, whether end of the service benefit apply me or not, that doesn't matter. In a corporate tax structure, what is important is whether I am providing a service to the company as an employer-employee. Answer is yes, then it is okay. Doesn't matter what your visa says. So for example, there is a group of companies who have 20 companies in a group, your visa coming from company A. You are receiving salary from B, C, D, and E. So don't you think that B, C, D, E is able to claim the benefit of the salary? So they are eligible. So visa is separate rules because you have been given a visa here in this country under the category of a partner or investor. But you are working for the company in the capacity of a manager, drawing salary as a manager. I personally believe it is fully allowed. No problem.
What Ms. Shivani is asking, what are the deductions that can be claimed for corporate tax?
Any expenditure which you incur exclusively for the purpose of earning income of the company is allowed, except certain disallowed expenditure like donations, fines, interest, and other expenditure, what the entertainment expenses which they have specifically mentioned.
Mr.
Next.
Lalji Bhai is asking, can you please share knowledge for qualified tax group?
Sir, we will have one session on tax group, so there we will deal with this subject. Don't worry, this is the second program that we have done it, and then we'll do it next program on tax group only. So Kasim, let's make another program on tax group.
Yes, sure, sir.
Yeah, Asim bhai.
Sir, manager, as a manager person who is also a owner, so his investment share will also be taxable.
No, sir, investment is a share capital, which is not a revenue income. It is a capital income. So whatever money he invests in the company by way of a share capital is not taxable. Any money which he have invested by way of a loan is also not taxable. Any income what he derives as an interest on loan or as a dividend on share that he have earned is also not taxable in his individual hands. Whatever salary he is deriving from the company, that is allowed as a deduction to the company, but not taxable in the individual hand.
Okay, thank
इसके
you, sir.
अलावा कोई और ट्रांजेक्शन रह गई हो तो बताओ.
Thank you.
जी कासिम.
Ms. Kirti is asking, taxable companies taxable as a VAT group are required to obtain separate city registration.
Yes, so that is also a very good question. What somebody have given it. So VAT grouping under VAT and grouping under other CT, other corporate tax is separate. There may be different groups for VAT purposes and different groups for corporate tax purposes, or there may not be no group for VAT purposes and group for CT purposes, or there may be a group for VAT purposes, but CT purposes, everybody is separate. So all these possibilities are available. Don't mix VAT group and CT group under one basket.
Mr. Amir is asking if manager has changed and continues to be in business. Can we get new appointment letter as the COO and continue to draw the salary?
Of course, you can. There is no bar on it.
There's another question from Kirti Agrawalji. What is the treatment for drawings?
Drawings are not deductible. Drawings are share of profit, not taxable in the hands of individual, but not deductible.
So Subramanian asking if company is having a payroll software and the mainland customer is charged for payroll processing as no license is granted to customer, will it be qualified income?
Taxable. It is a non-qualifying income. But if you charge money for exploitation of the software, then yes, it may be classified under the qualifying intellectual property.
No more questions.
Well, sir, I think we have exhausted with all the questions. I hope
Yes.
you all must be benefited out of this particular session that we did. And I think Ayub is here. So Ayub, over to you for your concluding remarks. Please unmute and.
Thank you, everyone, for attending the session. We hope this insightful session was useful. We are happy to assist any of you. If you have any queries, you have our contacts, our website with you. You can contact us anytime. And yes, we'll have another session with another topic relating to corporate tax. Hopefully in the next.
Ayub, we agreed on the next topic on tax groups. Let's do it in the seminar. We agreed about tax groups. Ayub, you are on mute.
We will announce the date of the next session on our pages on LinkedIn and on our website. So we hope all of you join to have a better idea and clear understanding about the tax group, corporate tax group. Thank you.
Thank you, everyone, and
Thank you, everybody.
be linked with us on our website, on our LinkedIn page. We'll get more knowledge about it. Anybody who have any particular peculiar situations, some material, something to share, please do share with us. And we all are there to help you out to understand each and everything. So thank you. Thank you very much.
Thank you.